Good morning, good afternoon, good day. Welcome to my live market meeting, 2nd December 2020. I am Sagar Nandi. I am retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter handle. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems and the only systems that I use in my live trading, and those are the same systems I'll be using today. They run on these underlying platforms. That was the last slide of my presentation. I'll continue with the live system and start with the global markets, starting with Australian index AXJO. For global markets, I am going to use Q Global running on Metastock. For stock and USA market study, I may use Q Global on Metastock or Q Elite on TradeStation. This is the standard weekly daily at a glance template. In the weekly, the backdrop color is bullish, but the candle shape is indecisive. In the daily, after displaying the bearish headwind signal, price pulled back a little bit. Today, Australian market has an indecisive shape candle. It is bullish, however overbought, and it has displayed indecisive shape candles in both weekly and daily. You may avoid taking new trades in Australian market right now. Japanese market index topics. Hello Wadi. Topics also has bullish backdrop in weekly. The candle shape is indecisive. Here also daily displayed a bullish, not bullish, in here also daily displayed a bearish headwind signal. That day had a sharp drop. After that, for 2 days, price crept up but slowly with narrow body candles. Today's candle shape is also indecisive. Like in the Australian market, Japanese market also has indecisive candles in weekly and daily, and you may avoid taking new trades. China market index CSI 300. The weekly is bullish. If you remember my last webinar, I mentioned on this day that most likely Chinese market, China index CSI 300 was going to go up and hit the upper boundary level. That was because on my last webinar day, that is the weekend, on this day, CSI 300 gave a go with flow trend following long trade setup, and I suggested looking for fundamentally strong stocks for buying. As CSI 300 hit the upper boundary, those fundamentally strong stocks might have also given considerable profit by today, covering the risk distance. If you look at today's candle shape that is indecisive, looking at that, you might book profit in those profitable trades. It is bullish but at upper boundary. Therefore, I will avoid taking new long positions in CSI 300 right now. I like to buy at swing low using the Q setups, and the last swing low with flow setup came on this day. UK market FTSE index. After moving up sharply in this period, it is moving sideways in the daily chart. Weekly is also moving inside the range for 3 weeks now. You may see whether it is breaking to the upside or to the downside to confirm the trend and then decide your next trend. Lastly, the India's Nifty 50 index, that was the strongest of the global markets, and that is continuing. Here the weekly shape is bullish. Weekly color is also bullish. Daily shape is bullish. However, today it has displayed a bearish headwind signal. Let's look at the shape again. If you look at the long lower tail, it is bullish. However, the open and close is exactly at the same price point. It's a doji candle, so I take back my earlier comment. This daily candle is indecisive. Indecisive daily candle with bearish headwind. Therefore, we will not like to take any new long trade in the Indian market. Also, it is above the upper boundary. Is there any shorting opportunity? No, because the candle shape is not bearish, and also there is a memory trendline resistance. There is a memory trendline support nearby. We are not going to short any instrument near support, so there is no short trade setup. The other reason we don't have a short trade setup, that is using the bearish headwind setup, is because if we apply the checklist conditions, the weekly is also not meeting the checklist conditions. Therefore, we will not try to take any short trade in India. Let's now have a look at the USA market. Let's use the market futures. For that, I will use Q Global again. E-mini S&P 500 futures ES. Weekly is remaining in bullish color, gradually going up. Daily displayed a bearish headwind. However, there was no bearish headwind short trade setup. Price is gradually moving up, supported by trendline support. Too close to upper boundary to take a new long trade. Too close to trendline support to take a short trade. If you are already holding long positions, you may continue to hold them. If the trendline support is broken, then you may look for exiting the long positions, provided their individual stop loss is being also hit. And at that time, that is when this ES memory support is broken. If that is broken, you may look for short-term bearish trades as well. Nasdaq futures NQ. Weekly is bullish, just below the watermark resistance. It did try to go above the watermark resistance, however pulled back little bit. That pullback has happened today in the overnight market. The last candle is the overnight market candle. It is too close to the upper boundary to take a new trade. In fact, if you remember my earlier videos, when price was at this point, then NQ or its ETF equivalent QQQ was the only one which had bullish color in weekly backdrop chart as well as bullish color in the daily entry chart. I suggested not taking any new trade in QQQ in the long direction at that time. Why did I suggest not taking new trades in QQQ long direction? Is because all the other market ETFs were overbought. QQQ was not overbought. So QQQ has gone up from that point, has hit the upper boundary and became overbought in the process. I didn't take any long position in QQQ as I suggested. I followed that myself. However, I took long positions in multiple fundamentally strong stocks, and I shared several of them in my traders forum on my site sagarnandi.com. We may review some of them and see how they played out. QQQ or Nasdaq futures NQ is very bullish now. Let's look at the ETFs using Q Elite. In the weekly here, I have added the thrust and jump indicator. Let's look at DIA. Let me remove the manually drawn trend lines. In the weekly, DIA, Dow Jones ETF, is moving sideways near the weekly watermark resistance where bearish headwind had come earlier from where price had dropped. Because it is moving sideways near that watermark level created by bearish headwind, I am not going to look for any buy setup in DIA right now. Yesterday, DIA had a bearish shape candle. The day before, it precisely bounced up from trendline support. Here, it bounced up precisely from trendline support, and yesterday, it bounced down precisely from watermark resistance. If you kept an eye on these daily support and resistance levels, then you could use the Q fine-tune intraday chart to day trade DIA using either the ETF or futures. Those tend to be very, or rather extremely low risk trades because you are using the daily and or weekly support resistance to initiate a trade, but you are initiating the trade on 5 or 10 minute interval. The relative performance is tilting down. That is another reason I am not going to look for long trades in DIA right now. If DIA can break below this trend line support, then you may look for bearish trades in fundamentally weak stocks. Russell 2000 ETF IWM. Weekly backdrop color is bullish. This week so far is creating an inside candle in decisive shape. Daily is bullish. There is no bearish signal. I'm not going to short IWM right now. The thrust and jump, they are showing that it is hitting the extreme possible level. Jump already has red dots. Thrust didn't have red dots, but it hit yellow dot and then tilted down. When both thrust and jump hit red dots in the weekly chart, then it is extremely extended, and you may be cautious about taking new long trades at that time. It is getting there. Jump is already extended to the red dots and thrust is close to that. Extended, but there is no bearish signal. Based on this study of the market futures and market ETFs, there is no weakness. Market is bullish. There is no other way to read the market. That is looking at the futures and ETFs. What if we look at the market internals? In the last video, I showed that there was no bearishness in the internals as well. Let me look at the weekly charts only. This is the composite internal for Nasdaq and NYSE. New high low, advanced decline, up down volume. For Nasdaq, there is no bearishness at all, rather it is quite strongly bullish. The same is true for NYSE. There is no bearishness at all. The indices themselves are also very bullish in the weekly charts. Jump and thrust has divergence. However, the divergence will be useful only if we have a bearish signal in the indices in the form of bear release or bearish headwind. That time we could look for reversal trades in individual stocks that are fundamentally weak. As of now, the composite internals are pretty bullish. Let me look at the major market indices, and I'll look at only the weekly intervals. This is the Dow Jones Industrials. The same study using new high low, advanced decline, up down volume, and thrust and jump. Only thing to note is that Dow Jones is not making new highs like it used to make earlier, though price is going up. Other than that, there is no weakness. Advanced decline, up down volume are pretty bullish. S&P 1500 internals, again there is no bearishness at all. S&P 500, again bullish. And Nasdaq, of course it is the strongest one. No bearishness, certainly it is very bullish. So not only the market ETFs, not only the market futures, but the composite internals as well as major indices internals all are looking bullish. Lastly, if I have a look at the canaries in the coal mine, bullish in weekly, bullish in daily, supported by many trend line supports in daily. It is not going to be easy for price to drop through all these trend lines in one go. No weakness here. And mega cap top 20, very similar to canaries in the coal mine stocks, has memory support in both weekly and daily. So no weakness in all these angles so far. Let's now look at Q edge. Let's look at the breadth using the advanced decline for the sectors, industries and stocks from 1 month period all the way to 1 day period. One month to 10 day, they are very bullish. 5 day is also bullish. There is some weakness over 2 day period. The red pie portions are bigger. However, yesterday was again bullish day. So bullish here. Little bit of weakness and then bullish again. If we have to decide trade direction today, QH is saying that those should be in the long direction. Only concern, and I am repeating from what I told in the last YouTube live session also, only concern is that market is extended, and I tweeted earlier, this was on 26th November, Q Finder showed an unusually large number of bearish headwinds in the daily interval, 366, and more importantly, without looking at the number, the height of the bar, the headwind signal bar, is much taller than all the other signals, bullish or bearish. These headwind signals work pretty well. At minimum, they caution us about protecting long positions, and if the bearish headwind setup is confirmed, we may take a reversal trade as well. And when in aggregate in my stock universe, which is all liquid stocks in the USA market and S&P 1500, that is what I run my finder on. When they show such unusually large number of bearish headwinds in the daily interval, I am careful. That is another reason for caution apart from the market being overbought. And this run was on 26th November in the daily interval. If you look at finder run as of today, and here I'm looking at the weekly interval. Again, now in the weekly interval, there is an unusually large number of bearish headwinds. In recent weeks, so large number of bearish headwinds hadn't come. So 26 November, there was an unusually large number of daily bearish headwinds, and as of today, there is an unusually large number of bearish headwinds in the weekly. That is continuing to make me cautious about taking too many long trades. Most of my positions are still bullish. However, I exited many of my long trades with profit, and I have a couple of short positions. Let's look at the weekly finder signals. Overall, all signals are still balanced, not bearish, not bullish also. Strength signals also balanced, trend continuation signals balanced, only reversal signals are bearish. Therefore, if I am going to look for short trades, I am probably going to look for reversal signals, headwind signals, box short setup or bounce short setup. Those will give lower risk and very high reward risk ratio. That is if I take the reversal signals. Overall, this weekly finder chart is showing that market is balanced, neither bearish nor bullish. If I look at the daily interval finder charts, all signals are bullish, strength signals are bullish, continuation signals are bullish, reversal signals are balanced. So overall, we have to say that the daily signals are bullish. Again, adding to my suggestion that if at all we are going to take trades, they may be primarily in the long direction. That is the consistent conclusion that we get from future study, ETF study, market internal study using composites as well as major indices, custom indices, as well as finder weekly, daily. Everything is bullish. Let's look at some of the recent bullish trades that I took and see how they played out. And as you know, I don't have the habit of picking and choosing. I continually share trade ideas before knowing the result. If I was so concerned about picking and choosing, I wouldn't share the trade ideas before knowing the result. Week after week, month after month, year after year. Let's look at a few trades that I have closed. One of them was this. Initially, I shared the trade idea in the last weekend market roundup, 28th November, and I explained that the long setup came as a go with flow long trade setup on this day. In the weekly, it displayed a high close doji with bull release, ALT. You may watch the video. Let's look at ALT using live charts now. This was the day when it gave a bullish flow and I took the long position at that time. What were my reasons for taking the long trade? One was that this was the earnings period. It dropped sharply. However, it stopped there. It never breached that earnings drops low. It meandered around and then went up with a bullish flow candle. That gave me a very low risk entry point. And at the same time, weekly created a doji followed by a reversal candle. You can see that from the band indicator and a bull release signal. The fundamentals were strong. I think I shared it in the webinar. Let's look at it now. Using Q Vital, I'm doing the fundamental and peer analysis of ALT. If you watch my trade ideas, you follow them, then you know their success rate tends to be pretty high. How high, you may assess yourself by going through it. Our philosophy is to get at least 60% success rate with 1:1 reward risk ratio, and I am confident you will find my success rate is probably more than 60% and probably reward risk ratio is more than 1. You may assess that yourself. And if some of you are not achieving that in your trading, whether you are using Q systems or not, the difference may be due to few things. One is the techniques I am using are very unambiguous. It is easy to decide whether there is a valid Q trade or not. And secondly, the technique allows me to take a long trade only if industry is strong, fundamentals are strong, and technicals are giving a low risk entry point. If you ask me what is the secret of my trade ideas being probably more successful than other trades, is these two. One is I'm using unambiguous techniques, not subject so much to interpretation. And secondly, and very importantly, the second factor, I am combining fundamental, industry, and technical strength. And this is ALT's Q scores. Great valuation, great earnings growth. That is a 3-star candidate with a short squeeze potential. Even now the industry is strong. I could take the trade at the, I would say, the lowest possible price point, because that was the only, the first day really after this sharp drop during earnings that flow turned cyan. How much was the profit from that day's entry point to yesterday's high? That was 44%. To yesterday's close, that was 31%. I'm reading the percentage number, the third bottommost number from the pop-up. So whether you took profit yesterday using intraday charts or using end of day charts, you had more than 30% profit in the trade. Your stop loss would be just below the trend line support which would be, let's see how much. Okay, it's difficult to draw it, but you can see from the distances that your risk was much lower than the reward. Now, what to do with this trade? It displayed an indecisive shape candle yesterday. The weekly is still pretty bullish. The fundamentals are still good. We saw just now, still undervalued. It has displayed bullish pressure for 2 days in a row. Very high buying activity going on for several days, shown by these dots on the activity bars. In my trading way, I don't like to exit full position under such circumstances. You might book partial position and hold on to partial position, trying to let profit run. If you catch undervalued stocks at a lower price point using Q technicals in this manner, they tend to give very high reward risk ratio if you can hold on to at least partial position. This was one of the long trades that I took and I booked some profit already. Let's look at the previous trade idea that I shared. I shared that 5 days ago, 27th November, that was on Dropbox DBX. And this trade idea I shared on Twitter first. My Twitter handle on November 25th. I showed the chart that it was reversing from memory trendline support. These memory trend lines work pretty well. You could take the trade using the trendline support in daily and precise entry technique on intraday charts somewhere at the lower end of the green candle. You wouldn't have to wait till the day's close. I did the same and I knew that the trendline resistance was nearby, which would be my profit target. It didn't have much space, open space above the entry price, so I was ready to book profit at the trendline resistance. That would still give me reasonable reward risk ratio, and it was a low risk trade. Let's see how Dropbox played out. This was tweeted on 25th November. Let's look at Dropbox. In the daily, I am using hotkeys Control Shift M to change the template to show the historical memory trend lines. This was the resistance based on which I decided to book profit, and this was my entry point. So when it hit the trendline resistance, it pulled back and closed with an indecisive shape candle. At that point, I booked profit. Afterwards, price went up, but I wouldn't know about that. My technique allows me to enter a trade at a low price point and it guides me to book profit at a resistance, and when I enter the trade I calculate my reward and risk based on support resistance to make sure that even if I exit the trade at resistance, meaning if the stock fails at the resistance, still I would have at least 1:1 reward risk ratio. That was the case in this trade. So I exited the trade on this indecisive shape candle that closed below the trendline support. After that it went up, but that's fine. My target is to have at least 60% success rate with 1:1 reward risk ratio in aggregate, and even in this trade I achieved that. You will start to have an idea of the success rate that you may have using Q techniques once you learn how to use it from the ideas that I share, because I shared them before knowing the result. Let's look at one more idea that I shared. I don't know if I have closed it. Let's look at the trade. RCUS. Let's look at what I shared. I shared it 5 days ago, 27th November, on RCUS. It was a biotech stock. Biotech started turning around right on the day I shared the idea, and it started accelerating. Once you have the Q systems, you will be very comfortable, I think, taking turnaround trades. Be it turnaround in terms of industry rotation, like here, be it turnaround in terms of earnings growth change, increase, and be it turnaround in terms of technical charts. And those turnaround candidates are the highest probability trades when you combine forces from all the angles, and they give high reward risk ratio also. RCUS was also a star candidate, 3-star candidate, great valuation, great earnings growth. And here you can see again what I mentioned just now. It is a turnaround candidate in terms of industry strength and also in terms of earnings growth. Has a short squeeze potential, strong industry. And it gave a go with flow long trade setup. When I shared it, it was starting to go up with excellent trendline support, many of them, and had a bullish flow candle at the right edge. This is what I shared 5 days ago. Let's look at the chart today. RCUS. I shared the idea on this day. Let's check the date. 27th November. Yes, 27th November. I posted it on that day. So this was the go with flow long trade setup. Very next day it hit the upper boundary. That would be the initial profit target. So this trade also hit the profit target. Therefore, if you take the Q trades or if you follow my analysis, few things you would notice. One is the success rate is meeting the required criteria at least 60%. Reward risk ratio meeting the required criteria 1:1. Third point you would notice is the holding period. They tend to be between 5 to 7 trading days or less. If you notice the latest examples where I booked the profit already, you might have noticed all of them closed before 5 to 7 trading days, sometimes much before that, like RCUS closed the very next day. When you combine that factor, the holding period, along with the reward risk ratio and success rate, you start to understand why the Q philosophy works, because the money works for you many times in a year. That philosophy is explained on my website. Why the Q techniques work is not only about the unambiguous checklists trade setups, not only about the easy to use systems, not only about the 360 degrees approach where you combine industry fundamental technical strength, but also about the philosophy that allows you to make your money work harder. You may go through the philosophy slides here. You will understand that the small profits, maybe between 4% to 30% profit in each trade, depending on how fast the stock is moving, those profits add up even if you risk only 1% of your total equity in each stock trade. And here I am not even talking about options trades. I personally don't use options for leverage. If at all I am using options, I am using them with for more flexibility for managing my trades. I am not using them like using speculative calls to increase my profit percentage. the last few trades without pick and choose that I looked at, that I shared, that I closed, all ended with profit. Now let's look at a few trades that I shared that might not have closed, and I don't know if you took it. I hesitate to tell whether I have a position in a trade or not unless I say it myself. All I can say is that I have shared the idea. And sometimes when I chat with individual Q traders, I may tell that these are my holdings. Sometimes in webinars also I may tell, but I don't tell that as a trade tips. I tell it as a way of disciplined trading, explaining that approach to traders. These are not meant to be trade tips. I don't want to be obligated to tell exactly when I'm entering or exiting my trades. I'm just explaining what I think extremely robust and successful trading technique. Yesterday I shared Tyson Foods. The industry was down one day ago, and yesterday it turned up. The relative score tilted down, meaning though the industry went up, the other industries went up more. Still, the fact that the industry turned around, and indeed here also you see the turn around graphically from negative percentage change one day earlier in real time when I shared it yesterday, it turned to positive change, percentage change. That allowed me to drill down into the industry to look for buying candidates, and these value plus growth 3-star candidates may work wonders to your trading account and profitability. Again, I could find a star trading candidate, great valuation, great secondary valuation, great earnings growth, again a turnaround candidate in terms of fundamentals. Here again, you see a turnaround candidate in terms of industry percentage change and a turnaround candidate in terms of earnings growth. It also pays a decent dividend of 2.7%, not very high, but much better than bank interest at present. And when I shared the idea, I showed that it was breaking out from weekly memory resistance as well as daily memory resistance. Looking back, I saw the previous 3 high pressure days were all in the bullish direction. If you are comfortable taking breakout trades and if yesterday price closed like this or better, then I think TSN Foods gave a very nice breakout trade candidate yesterday. Did it close as bullish as this? Let's check it out. The daily closed above the trendline resistance but closed with an upper tail, and the weekly closed right at or maybe slightly below the trendline resistance. Looking at that, Q guideline is not to enter the trade yesterday but to watch the stock today using Q fine tune chart, and if it gives a low risk entry point on fine tune chart today, then the guideline allows one to take the trade. As of yesterday's close, Q guideline would be not to take the trade, looking at the weekly closing at or just below trendline resistance and daily having an upper tail. You may keep an eye on this stock today using fine tune chart. In this way, Q technique doesn't only tell you when to trade, also tells you when to wait patiently. Let's look at one more stock that I shared. The result is not known yet. This is also a trade idea I shared yesterday on GRFS. It's a Spanish biotech company. If you look day-to-day percentage change, again at industry level, it was a turnaround candidate. Whether you look at the primary industry biotech or if you look at the alternative industry for this stock, pharmaceuticals, both of them had a turnaround from down percentage move to up percentage move yesterday. Once again, I found a 3-star fundamental candidate. Great valuation, great earnings growth, not so much of turnaround here because it didn't turn from negative to positive. Instead, it was steadily improving or accelerating earnings growth from 0.1% to 3.2% to 28%. Accelerating and great earnings growth with undervaluation. The industry was strong yesterday. In the weekly, it was, and I think still is, inside the triangle pattern. In daily also, it is inside the triangle pattern. If the memory resistance lines were not there, then yesterday gave a bullish go with flow long trade setup. However, the trendline resistances are there. Therefore, if you are considering taking a trade using close of the day, you might not take the trade yesterday because the trendline resistance is too close to yesterday's closing price. On the other hand, if you found the setup beforehand, then yesterday using fine-tune chart, you could take the entry near the lower range of the daily candle. Then you could take the long trade because that would still allow you to have a narrow risk compared to the possible profit in the trade, considering you are exiting the trade at the trendline resistance. That would be similar to the trade that I shared and took and closed with profit in Dropbox. You could take the trade using real-time fine-tune chart, and you could find the trade using Q Finder or Q Radar, depending on whether you are using Q Global Metastock or Q Elite on Trade Station. You could find it in real time and could take the trade using intraday fine-tune charts. You would not take the trade at yesterday's close if you are following Q guideline. And Q guidelines work pretty well. Those who use the guidelines, they know if you try to improvise, you will have great satisfaction, but probably your profit will not be as high as if you just follow the Q guidelines. This is a stock you may keep an eye on. Spanish biotech. Biotechs are doing pretty well. If you had entered it yesterday, like I mentioned, great. If not, you may look for a breakout setup or a pullback after the breakout. Every day in this manner, you are able to find trade setups. I mentioned to few friends that I am also holding a few bearish trades, and I only want to share the trades that I talked about earlier. In private chats, I mentioned to several people that I was looking at home building. It was rip roaring earlier. However, I don't have to decide trading decisions based on what others are saying, CNBC is saying, or even just the charts are saying for the ETF, for example. I have this powerful Q edge that was showing that home building was weakening, and it was weakening for a while. And this is relative score. This weakness does not mean home building was dropping. It was showing that relatively speaking, it was weakening. and before that home building was rip-roaring. So that was the indication not to take new trades in home builders, rather look for exits with profit in existing long positions and potentially look for shorts. This relative weakness, as you can see, was there for many periods now, up to 4 months, so it was there for a while. And I was watching it, and I mentioned that to few traders earlier on chats, and you could see that yourself using Q systems. It was at the watermark resistance. 1 time, 2 time, 3 time. So it was creating a triple top. And if you look at the magnified image, it had a trend line support. One day earlier, it tried to break below that but failed, closed right up the trend line support. And yesterday, that is Tuesday, it in fact broke below trend line support and the flow color turned negative. That, in my view, in QA is not bullish. Now, if you looked at home building industry, and this is real-time data, but using just after market close, yesterday home building closed as the weakest industry of all. So not only it was relatively weak, it was down also, whereas the market as a whole was pretty bullish yesterday and over several weeks. So home building is showing weakness, not only relative weakness, absolute weakness also. The real time, or now it's not real time. Now if we look at QH, it will be 1 day score is the weakest. Let's look that up. Let's look at the sectors first. I'm drilling down from the market level view to the sectors. Home building is in consumer discretionary. I'm going to drill down into the consumer discretionary industries. This is home building. I may double click to sort. Home building drops to the bottom. So it is not only the weakest in consumer discretionary, it is the weakest of all the 147 industries. This is relative weakness. And if I look at the percentage change, it is very weak, very weak. In fact, if I sort by 1 day percentage change, it is again dropping to the bottom, so it is the weakest of the industries. We saw not only in consumer discretionary, among all industries, it is the weakest. What about 5 days? Let's go back to industry and sort by 5 days score. That is also the weakest. Again, not only in consumer discretionary, of all industries, it is the weakest. If you followed Q Edge industry score, relative score, and combine that with the absolute percentage move, you could get ready to take a bearish trade in fundamentally weak home building stocks. And I did take them. And I took them even in a bullish market. And I talked about it earlier. It is kind of hedge. The market is at a very high level, displaying many bearish headwinds in daily interval as well as weekly. I want to hedge, but unlike many other people, I don't always hedge with put options of existing positions. Instead, I short the weakest stocks in weakest industries. See, I have holdings of long positions, but they are in strongest industries, strongest fundamental stocks. I don't want to hedge using them sometimes because they are very strong. Even if the market drops, they are less likely to drop so much. Instead, I use weakest fundamental stocks in weakest industries and short those as a hedging. That works pretty well once you get used to it. So home building weakness I was watching and I shorted this stock, CVCO. Not a trade that I shared. Market was bullish, so I was not going to happily share bearish trades, but this I took as a hedging trade, and you would see that I identified a home building stock that was fundamentally weak, very weak, and I used that as a hedge for my long positions in fundamentally strong industry stocks. Let it get the data, give it a few seconds. It's retrieving the peer stocks. Let's look at its charts in the meantime. CVCO. I'm looking at it using the daily entry chart. It was range bound for a long period, and within the range it displayed a bearish headwind here at the top, didn't go above the watermark resistance here that was created by that bearish headwind. Again it came to the same price level, displayed another bearish headwind, started to go down. On this day it gave a go with flow short trade setup. So I took the short trade right on this day using real-time charts. Then when it came here, I had a good profit. Yesterday I was keeping an eye on it. Though home building was very weak, this was starting to go up. Using real-time fine-tune chart, I exited the position. Now normally would I exit a position in a weak fundamental stock in the weakest industry, short position, just looking at a chart like this? I might, for two reasons. One, if my entry price was somewhere here, when price came to this candle's low, I already covered my risk distance. So that was one point. Whenever my risk distance is covered, I start to think about booking at least partial profit, because that is what decides the Q success philosophy. And I pointed to that detailed presentations on my website. So I started to consider booking profit. And another reason that led me to close this trade quicker probably than I would do normally, looking at industry's weakness, is because that stock is extremely illiquid. I saw that when I entered the trade, the bid ask spread was too high. It's not a very low price stock, not very high price also for most of you. It's $200 stock, not $10, $20, $200 stock. However, the bid ask spread is too wide. You wouldn't expect that looking at the price chart or looking at the price level. Because the bid ask spread was too wide, I didn't want to exit it in an adverse situation when the stock was starting to go up. So yesterday, using fine-tune chart, I booked it and I closed it with a decent profit. If you can keep on taking profit like this, small profit, which is of course greater than the risk taken in each trade on aggregate, then there is no reason, as I said, not to make some profit from the market. So this is one trade I took as a hedging position to my long positions and I exited it. The industry was already weakening, and let's look at its fundamentals. A 3-star bearish candidate. I love them both for long trades as well as short trades. Overvalued stock with negative earnings growth for 3 successive quarters. The industry is weak, as you can see. So these are my hedging techniques. Instead of buying put options on my strongest stocks, I short the weakest stocks in weakest industries. And this trade worked out pretty well. You would not be surprised if you knew that I have a short position in XHB also. And if I took a short position in XHB, I would have taken it using verticals. If you see XHB chart, weekly actually has a bearish headwind now. It had a bearish headwind earlier that created a weekly watermark level that was never breached. 1 week ago it tried to go above that but closed down with a bearish shape or maybe mixed shape candle with long upper tail. This week so far it has bearish backdrop color with bearish headwind, and in daily it had a false upside breakout at the watermark resistance. Yesterday it broke below memory trendline support with very weak relative performance. If I am going to short XHP at this moment based on yesterday's close, I would probably use an options vertical. It could be long put vertical or short call vertical or both. In that way I will have no risk of theta change or volatility change. It will only be a delta negative trade. Let me share one last idea, two stocks actually. One is CDE, and some of you know I talked to you about the trade, to several of you. I took the trade on this day as a box long setup. It was creating a triple bottom, then it gave a bull release signal. The weekly had excellent trendline support with multiple long lower tail candles. So that was my reason to decide on the box long trade setup, and I knew there was a trendline resistance at about 8 price point at that time. So how I traded it is that I bought the stock, and by the way, right on that day I tweeted, I think, that the gold mining suddenly recovered. Suddenly. It was the probably one of the most accelerating, if not the most accelerating industry. Prior to that, gold mining was weak for a long time. So again, I could catch the turnaround of the industry, then looked at a strong fundamental stock. By the way, CDE, as per Q scorecard, was and is one of the strongest fundamental stocks in the industry. So I caught it right at the best possible time again. Turn around in terms of price change, turn around in terms of industry strength, and my target was the trendline resistance. In any case, it has given me significant profit by yesterday, and yesterday gold was strong again. And I shared another idea, I don't remember, on Twitter or on my forum, that was on Newmont, another gold mining stock. Here the weekly recovered the trendline support, that is bullish. So far the weekly shape is bullish, though the color is bearish, and that is expected because it had a sharp drop for 2 weeks. In the daily it recovered the white direction line with bull release signal, and for last 2 days it is going up with extreme high or very high activity shown by these dots. You could take it as a pullback setup 2 days ago or 1 day ago, or yesterday. You could take it as a long position using flip to green or change to green, maybe change to traffic light green kind of idea. It's not a Q trade setup with unambiguous checklists, but there are many traders who look for fundamentally strong stocks to pull back to either white or yellow direction line, in this case white direction line, and give some bullish signal. In this case, the bullish signals were the bull release signal in the daily chart, and the fact, very importantly, that it regained the weekly trendline support. So I am bullish on gold miners now. I have at least one position, that is in CDE. Now yesterday I did something. Let me go back to CDE. When I initiated the position, I told several traders in private chats, Zoom meetings, that I took it as a box trade and I bought the stock and I shorted call at 8 strike. Why did I short the 8 strike call? Because that would be my natural profit target. The short call out of the money would have less than 1 delta. So if price went up to 8 level, I would have significant profit. if price didn't go straight up like it did, if it meandered around, even went down little bit, recovered, the short call would lose money and my stock I will continue to hold. And here I reinforce the comment that I take trades only in strong fundamental stocks. That makes it psychologically much easier to hold on to the trade and not get whipsawed easily. So it was a strong fundamental stock. On top of that, I had a short call leg that was having time decay. So I was even more comfortable holding on to the trade. Yesterday what I did, it was about to go to $8 strike, not yet hit the strike, not yet hit the trendline resistance. I took out the short call leg. I'm just holding the long stock positions. It has good profit now. If it starts to come down, maybe after hitting the trend line resistance, I'll book entire profit in this trade because this has a trend line resistance nearby. I will not mind booking profit. That will give me a good profit. On the other hand, if you go back to Newmont, NEM, this doesn't have any resistance nearby. The next trend line resistance, watermark resistance, upper boundary, all of them are far away. So I am not in any hurry to book profit in Newmont if I am holding. Probably I am holding a long trade, long position in Newmont also. We are just over 1 hour price point. There are many trade opportunities as I keep on sharing. And if believe me, other than the ones if I share one trade, probably there are at least 5 trades available on that day on average. You may confidently take them using the 360 degrees technique, and as I mentioned, you look at the industry weakness, you look at the bearish headwind signal, you may start to hedge the positions. You may use put options on your existing positions, you may use put options on market ETFs, or you could hedge using weakest fundamental stocks in weakest industries. You may try all of them out. You will soon start to have an idea which one works best. And you will even more probably understand the power of the 360 degrees technique. Let's end today's session here, not with that slide. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session, which will be during the weekend. I want to keep free for myself, so I don't decide the time beforehand. Most weekends I am having the session. I will announce the time on my Twitter page, and if you are subscribing to the YouTube channel, you would come to know through that also. Thanks once again. Have a wonderful day, and as I always say, trade profitably. No reason not to do so if you are disciplined and if you are having a robust system. Thank you again. Bye bye.